Well, I don't know how many of you guys follow the information on the markets, but today the markets fell considerably. According to Market Watch, the Dow poised for worst one-day point drop in history as sales turned panicky. And you can take a look there, what's going on. So dropping below 4%. And you can kind of see up here, I can zoom in a little bit for you guys so you can see. Right there. Gold is up, which is normal when the stock market goes down like this. The Dow is down 4 points. S&P is down 3.5. The Nasdaq went down 3. The global Dow is down 2.64. And oil has gone down 2.52. And my personal opinion watching this, let's see, how do I put this? Okay, so was it yesterday? Yesterday, Jerome Powell was sworn in as the new Fed chairman. As inflation concerns cause markets to swoon. You know what? I think that was Friday, and I watched my stock. I think I lost like $1,500 in the stock market Friday. But my stocks went up considerably today to make up for the loss that we had on Friday. But when I look at this overall picture, this is what I see, and I don't think anybody has talked about this, but this is the disapproval of Trump's decision to release that memo. Okay, so everybody knows that, you know, the banksters behind the scenes in D.C. have a lot of pull because they control so much of the U.S. and the world economy. And I think this is their disapproval of what Trump did. Okay, because when the markets are doing good, the president always gets the credit, and when the markets are doing bad, he gets blamed. But if you have any, if you listen at all and watch the markets at all, you'll come to realize that, you know, the president really doesn't have anything to do with the markets. This is individual and institutional investors that invest enough money that they can drive up or drive down the prices of stocks. So there's an article that came out here. Trump may learn what Obama, Reagan, and LBJ did about markets and the economy. By intertwining the stock market success with his own, Trump walked into a trap of his own making. So we can click on that and read that article. I think this is all a strong arm tactics personally. There's I haven't found any articles that talk about why all of this is happening. So I'm assuming, you know, because it came out right after Trump did the memo, that the markets began to fall Friday. Many of the stocks fell, and today the markets as a whole are coming down. They say it's not necessarily Trump's fault that stocks are now falling, but it is his decision to associate with stocks. So he's saying the stock market has smashed one record after another, gaining $8 trillion in value. President Trump bragged in last week's State of the Union address. Oops. Trump's boast came in the middle of a week in which the Dow Jones fell some 1,100 points, including Friday's devilish 666 point blowout. All told, the blue chip index fell 4.1%, erasing the billions of dollars in wealth. The sell-off continued Monday, with the Dow retreating as much as 1,400 points. So I can tell you guys, as soon as the news came out that Trump released the memo, this is when the stocks began to fall on Friday, And at the end, it came out to, it fell 666 points. Okay, guys? Is that a coincidence? I don't think so. I think there's some individuals trying to send a message to Trump that if he's going to take credit for what they are doing, and he doesn't do what they want him to do, they're going to sink the markets. So, let's see. It's not necessarily Trump's fault that stocks are now falling. By many measures, the market has been overvalued for a long time. Well, hallelujah. I'm glad somebody's admitting that. Treasury rates are surging, largely a reflection of an improving economy, and the Federal Reserve is slowly taking away the cookie jar. Its decade-long, multi-trillion-dollar scheme to push investors into stocks by driving long-term rates down through the purchase of long-dated bonds and mortgage securities. Investors also gotten too complacent, thinking the risk-off mentality was here to stay. Jerome Powell was sworn in as Fed chairman as the inflation concerns caused markets to swoon. But Trump did screw up by associating himself too closely with the market. Since he became president, barely a day has gone by without him or his press secretary bragging about it, thus inferring that the market's rise was all because of Trump. By intertwining the stock market's success with his own, Trump walked into a trap of his own making. If you take credit for the rise, then guess what? It's your fall. Yet Trump and Sanders mysteriously came down with a case of laryngitis on Friday. Neither uttered a peep. That's no surprise for a president who thinks he's infallible, never errs, and is never to blame for anything. If the downturn continues, look for him to start throwing people under the bus. That's what he does. Presidents have often learned the hard way that the economy and stock market often don't move in lockstep. In 1980, when Jimmy Carter was president, the S&P soared 31.7 points, but the GDP shrank 0.2 points. And Ronald Reagan was elected in a landslide. 2 years later, stock rose 20.4%, but the economy contracted by 1.9% in the midterm election, and Reagan's Republican Party lost 26 House seats. So the market goes on, blah, 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 blah. Apparently, Trump screwed up taking credit. Now they're going to show him. They're going to sink the markets. All of this came on the heels, guys, of that memo being released. So this doesn't surprise me, nor does it surprise me that the end result of Friday's losses was negative 666. You know, I think it's so obvious, even if websites don't want to report, you know, the truth about it, it is what's happening. They are flexing their muscles here, these institutions are, to show him who is boss. So I would like to see how Trump responds. Is he going to, you know, get in lockstep with them now and start doing what they want him to do so the markets will go back up? Or is he going to stick to his guns? And we'll see. We'll see. But, you know, it just goes to show there's some pretty sick individuals out there that have quite a bit of money and that can tank the economy, whether you give them bailouts or not. They have been allowed to gain so much control over these markets that the government itself, the U.S. government, you know, who has the power to regulate commerce, clearly has no power over the markets of commerce. Sad, sad, sad. And it's their own fault because they gave their power away to private entities and individuals. Sad, but, you know, they're getting exactly what they deserve. This is a result of Congress delegating too much of its powers away. Okay, guys, hope you're having a good day. I'll talk to you later.